Welcome back. You're still tuned into Halftime Report on CNBC-TV18 this Monday afternoon. Let's talk about one specific company now. Medicure, which is basically a medical device manufacturer, reported what was a tepid Q1 performance with muted revenue growth of around 5% and margins coming under pressure. The company has reduced their international business growth guidance to 5 to 10% versus 12 to 15%. And are expecting higher R&D costs, but are bullish on the domestic business. Himanshu Baid, the MD of Medicure, now joins in to discuss more. Mr. Baid, thank you very much for taking the time out. Well, let's talk about the international business to start with. You've reduced your guidance there. You're expecting around 5 to 10%. Europe was weak this time. Just tell us what took place in Europe, because we understand your infusion therapy segment was impacted the most.
See, I think our core business has been infusion therapy in Europe. And I think due to, certain overstocking by European suppliers, and I think inventory reduction was also one of the core reasons. Because of this tariff issue globally, I think most of our customers were working on reduced inventory. But I think what I've also mentioned in our call earlier, that, now the market is bouncing back. The customers are now, placing more orders. So I think things are going to normalize, but we have lost one quarter, and probably that is going to impact us.
Which is what what we wanted to understand in terms of your overall projections for this year. Because I remember, Mr. Baid, when you joined us earlier, you had said this year's overall revenue would be upwards of 20%, led by domestic, which is 25 to 30%, and exports, which is 15 to 18%. So on the back of this lost first quarter, would you revise your guidance for this year?
See, for domestic business, our guidance still remains around 30%. So I think, and that's 1/3 of the revenue. So almost 10% growth comes from there. And I think export business, that's 2/3 of the business. So our guidance is between 5 to 10%. I think we should hit the upper deck. I think things are now changing rapidly now in Europe for us. So a lot of new approvals have come in. Actually, we got a lot of our products MDR certified only in June this year. So I think that was also kind of a laggard. So that is also changing a bit now. So I think we should hit the upper deck at 10%, I think.
All right. I just wanted more details with regards to the US business, because that's, a small percentage in terms of sales. In fact, you can quantify it for us.
Yeah.
And what is your reading in terms of, this 50% tariff and how it could impact a company such as yours, which is doing business with the US? And in fact, I think you have 2 CDMO contracts come up, which are also focused on the US. So how does this play out?
See, I think, we were okay with the 25% tariff because we were very competitive as compared to our neighboring countries like Vietnam, China, or maybe Malaysia. But I think 50% keeps us a little bit away from the US market because of the cost reasons. We don't know what is going to happen, but I think, for certain products, we are still going to move forward because we haven't seen anything from our customers so far, because it's a pretty fresh thing right now. But it is going to impact if it's going to stay around 50% level. So that is the worry right now, within the company. But as US business is still very low, it's close to around 2.5% of the total business, even this year. So we're not overall worried with the US tariffs. But I think next year and year forward, I think we have a lot coming from the US. So I think that will be a little worrisome.
All right. So, that is something that we will definitely monitor. Currently, just 2.5%. Next year, a lot more comes in from the US. We'll talk about next year in just a bit. Yeah. But just to speak about FY26 once again, you said exports should grow between 5 to 10%, the upper deck of that. Yeah. So that's about 10%. That's two-thirds of your business. Yeah. Domestic grows at 30%, which is 1/3 of your business. Yeah. So if I do a weighted average, this year you grow at 10% on your top line. That's nearly half of what we thought in at the start of this year.
The weighted average will be Mangalam will be close to around 16%.
Got it. So that's 16%, and that grows around 4 or 5 percentage points lower than what you had earlier accounted for.
That's correct. That's correct. Absolutely.
And margins between 25 to 27%, that guidance stays?
We should be, because in fact, you see, Q1, the gross margins have improved by 150 pips. So I think on the margin side, we are very comfortable. I think we should be close to 26.7%. I think we are pretty much okay with that number right now.
Okay.
So we are comfortable there.
Okay, your guidance on margins is 26 to 27%, though you're hiking your R&D costs to focus on newer segments, I understand.
Yeah, that's correct.
Okay. Your renal business is doing very well. Are we now talking about the exports reducing significantly when it comes to high-end medical devices in India, and companies such as yours are now being substituted by the larger companies, the Siemens of the world, etc.?
So I'll tell you, in certain categories now, Indian companies have started doing well. Let's say orthopedic implants is one of the categories where India is now using 50% locally made, let's say knees or hip implants. In cardiology, even stents, if you see, around 70% is now locally made products being used in the country. So in many categories, we are achieving a higher local content, local consumption compared to foreign made devices. So that's a very welcome sign. And I think even after COVID, if you see, almost 2,500 new factories have come up for medical devices, or new licenses have been granted for medical devices across medical device parks and across different parts of the country. So I think the industry seems to be quite positive and promising. And I think government has done a lot actually in last 4 or 5 years. So I think we continue to get that support. I think we'll get the self-reliance very soon on medtech industry. I think we
So
are 5 to 7 years away.
What are you guiding for? I have an additional question actually on that before I get to your guidance.
Yeah.
What do you think that Indian companies could become net exporters when it comes to high-end medical devices?
Yes, and I think if you see large companies like GE, Siemens, and Philips, and many others have started manufacturing in the country. And a lot of high-end equipment we were importing earlier is now getting manufactured in the country. So currently the ratio is still a little skewed. It is 8 billion of imports and 4 billion of exports. But if you add local manufacturing, we are at par. So 4 billion local manufactured, locally consumed. So industry size around 16 billion. So I think in next 3, 4, 5 years, I think maybe 5 years, we'll be exporting more than importing in the country.
Wow. That's music to our ears, definitely, for the medical device community. But Mr. Baid, before we let you go, then can give us a concentrated guidance in terms of the renal business. How many dialysis machines do you think that you can probably install in FY26 and maybe extrapolate it for FY27 as well? And tell us about the cardiology and the critical care business as well. What is the growth estimate for both those segments? Let's start with the renal business.
So for renal, I think this year we have guided for 600 to 700 machines. In the first 4 months, we already installed 130 odd machines. And, as we see the year, we should hit that 500 to 600 number easily. Next year, our target is to install close to 700 to 800 machines. Indian market is probably around 5,000 machines per year. And that's the run rate today. So overall, 50,000 machines are installed in the country, which has an average life of 10 years. And so that's where we are guiding today. So we should have around 12 to 15% market share by end of next year, at least for the machine business. And on the consumable side, we should already do over 15% by end of next year. That's the plan. On the cardiology side, we have just launched the product this year. So we'll be implanting around close to 20,000 stents this year, and a lot of other consumables which we already started manufacturing, and most of them are import substitute products. And so next year, number could go up to around 50,000 plus stents. And Indian market for stents is close to around 15 lakh stents today.
And what does this mean in terms of revenue? 500 to 600 dialysis machines this year and 20,000 stents this year. And for the next year, 700 to 800 machines and, 50,000 plus stents?
So for dialysis business, we have guided for a revenue of around 50% increase from last year, 150 crores to around 50% increase in FY26. And FY27 also, I think we should be close to around 40-45%. That's the number we have in our mind. And for cardiology business, it's just a start. So, numbers are very small right now, but this year itself, we will do close to 25 crores. Going forward, next year could be 100% growth to around 50 plus crores.
And critical care?
Critical care has also started, only early last year, we started critical care. And critical care is more focused toward oncology side, again, import-driven business. So again, in that area, we should do close to 25-30 crores this year, and next year around close to 50 crores.
All right, take that point. Thanks a lot, Himanshu, as always, for joining in and giving us your views on the growth in the devices market for the country and for yourself itself. Because of the lost first quarter, you've seen a decline in your overall guidance for this year. You believe growth can come back in the remaining 3 quarters rather. With that, we'll step into a short break. And as we do that, let's get you some good news. All you viewers, CNBC TV18, which is India's business news leader, is now just a click away via the all-new app, which gives you instant access to breaking news, in-depth articles, financial world updates, all of them at your fingertips. You can download the app from either the Apple Store or the Google Play Store, or just scan that QR code, which is up for you on the screen.